All right. Hi, folks. If you are out there tuning in, either live or maybe later, my name is Jeanette Cochran, and I am the executive pastor at Seneca Creek Community Church. I also am a small business owner. My husband and I own a small business, Cochran Automotive, together. And I am here with Don Keninitz. And Don he was on our church board for like 2 decades.
Yep, that's right.
Also our go-to finance guy who really helped us navigate through loans and the recession of 2007, I think.
Yep.
And
Yeah.
Don, and you are a CPA, and tell us a little bit more about what you do.
Okay, so I'm a CPA, and I have been a CPA for 40 years, so I just dated myself. I started when I was really young. And so I've kind of seen it all at this point. My career has been semi-focused in the audit area, but I've spent a great deal of time consulting, and that's primarily what I do today. I've been a partner in a national firm. Right now, I'm a partner, or principal, actually, we call it, in a large local firm called E. Cohen & Associates in Rockville. Eric Cohen, the founder of the firm, is a guy I've known since almost the day I started in public accounting, because we started at the same firm. So
Yeah, wow.
And I probably have spent these last 4 days doing almost nothing but taking calls from clients that are wanting to apply for the various programs that are available, for loans and grants and things like that.
Yeah, that's great. Yeah, so I've been navigating the CARES Act programs, especially the Paycheck Protection Program, for 2 realms. First of all, as a small business owner, my husband and I are needing some help, as many of you small business owners out there are. Whether our business is actually labeled essential, but getting your car fixed right now is not essential for the majority of people, which means we are in crisis mode quickly. Also, our church is a nonprofit. So folks, if you are a nonprofit organization, you are eligible for some of these funds as well. And so I reached out to Don because I was getting either no information from bankers, or I was getting all kinds of crazy information. And when I found out, Don, over the couple of days that we talked, everything that you told me was spot on. And or if something came out and changed quickly, you were able to say, oh, here's the newest information. Like before even our banker, we had been talking with our banker a couple times a day, and he was trying to gather the information from corporate. And so I asked for this, you offered, and I said this would be great to offer this for folks at Seneca Creek and friends of Seneca Creek who are business owners, to really navigate some of what is this about. How do you apply and how do you qualify? So Don, you want to just give us kind of an overview of what is the CARES Act and what's available for businesses?
Sure. The CARES Act is 880 pages long, so wow. It's very lengthy, and it includes a lot of provisions, but people are going to be focused primarily on a few areas. And I'm only going to really try to speak to, in particular, one, and I'll touch to an extent on a second. But one area that is it does get into some unemployment relief. There's money out there that I want to say I think it increases unemployment benefits by an automatic $600 per week or something like that. And so states, some states are stingier than others about unemployment benefits. So that relief is out there, and you definitely want to look to that if you're someone who is was previously employed. But our topic today will be more on small businesses and independent contractors and self-employed individuals. So, as Jeanette mentioned, she and Eddie own a business, but I think we probably all know people who are also independent contractors, like real estate agents. I just finished a 1-hour webinar with 100 real estate agents because they're 1099 people. A 1099, by the way, refers to the form that tells you it's kind of like a W-2, but if you're an independent contractor, the company that uses your services gives you a 1099, and you could get those from a variety of companies if you work for a variety of them over the year. And then self-employed people. So, for example, I know several people who are construction contractor, handyman types that have their own businesses. There are maybe 1, 2, 3 people, landscapers that have their own businesses, and who are seeing their income go down pretty drastically all of a sudden. And they're eligible under this Payroll Protection Act. So what it does is it allows you to borrow an amount according to a formula. I'll get to that in a moment. And you then have 8 weeks in which to use the money. And if you use the money over that 8-week period, which I'm going to probably refer to a couple times as the covered period, because that's what the law refers to it as. If it's used during the covered period, then that portion of the loan will be forgiven, which is a great thing. The loans themselves bear interest at 1% a year, which is practically, I won't say free, but it's about as close to zero as you're going to get. The loans aren't due for 2 years. So even if you have a portion that's unforgiven, it doesn't have to be repaid immediately. And there's a 6-month deferral of any principal and interest payments. So essentially, if it takes you 2 months to use up whatever proportion of the loan you are able to use, you still wouldn't have any payments due for another 4 months after that. So let's talk about who's eligible. So eligible, the first category would be small businesses. And the media likes to use shorthand when describing these kinds of things. So a lot of people may have the misperception that they're only a small business if they're fewer than 500 people. And I think that probably is going to be true of the vast majority. But what the law actually says is any business with fewer than 500 employees or which already qualifies under the SBA's existing size standards for businesses. So the SBA has these size standards. They've been out there for years. They modify them periodically. But essentially, they're either employee-based or revenue-based. It's either based on your average revenue for the last 5 years or the number of employees you have had for, I think it's the last year. And the employees can actually go up to 1,500. So just because you're reading 500, there will be some businesses that can qualify even if they're up to 1,500. There will also some businesses that have that fall under a revenue size standard who will have outgrown it, but still have fewer than 500 employees, and so they would qualify. Mm-hmm. So it's an either or test, and so a lot of small businesses are going to be included. Second, it includes sole proprietorships, which essentially is someone who would file what's called a Schedule C along with their 1040. That would be someone who's in business for themselves. And those sole proprietors can have employees. And by the way, if you might have organized as an LLC, but if you're a single member LLC, limited liability company, you're the only owner, then you are a sole proprietor because that's considered a disregarded entity. And rather than file an LLC tax return, you file it on your Schedule C. So that's going to be a sole proprietor. Then it covers self-employed people, and it covers recipients of 1099s. 1099s, again, being independent contractors who perform work for other people, companies. It could be temp work. It could be, a real estate sales where, you're just an agent, and every time you get a commission, you get a 1099 for it. The loans started last Friday for small businesses and sole proprietors. And then this coming Friday is when 1099 people and self-employed people can first apply for a loan. And then I'll just go through a quick way of determining the eligibility. What's the basic eligibility? How do I figure out how much I qualify for?
Okay, Don, before you do that, I just want to throw out, we've got a few people that are watching on. So if you do have questions, you can go ahead and post them in the question box there, and we'll try and get to those before we finish up. Okay, go ahead, Don.
Okay, so to determine how much you're eligible for, you take your average payroll. And there's been some confusion about this, whether it was the most recent 12 months or the calendar year 2019. And just today, the SBA finally came out with a clarification that said you can use either. All right. The way the law read it appeared to be the last 12 months, most recent 12 months. But the SBA has clarified that. So you take whichever of those periods you choose, you divide the number by 12, and that's your average payroll. Now, what counts as payroll? Salaries and wages, any healthcare premiums you pay on behalf of your employees, any other insurance type premiums that you pay on behalf of your employees, like disability or dental or vision, any 401k or similar retirement matching or contributions that you pay. Those all count. So the first thing you do is you have to do this by month. You have to summarize those by month, because that is part of the documentation that you're required to submit. And then you add them up, divide by 12, and that is your average monthly payroll. And you multiply that by a factor of 2.5, and that's your eligible loan amount. The reason the factor is 2.5 is they're trying to allow you to borrow more than just 2 months of payroll. And the reason is because for forgiveness purposes, it's not just payroll that you can count toward forgiveness, but also rent, utilities, and mortgage interest that you pay as a small business. Now, most small businesses, of course, will have either rent or mortgage interest, but not both, and utilities. So that's the reason it's a factor of 2.5. Now, then, once you get your loan, you have 8 weeks to spend the money. And all you have to do then to apply, when the 8 weeks is up to apply for forgiveness, is to document the amount of money you spent on payroll, the amount of money you spent on rent, mortgage interest, and utilities, and submit that to the bank, and that amount should then be forgiven. Now, that is not, and I won't get into a lot of details on this, but I will tell you that that's not going to add up to 100% for most small businesses, because in some cases they will have already cut people and they may not rehire, so they'll be running on a smaller payroll than was used to compute their eligibility. There's also a provision that says for forgiveness purposes, you have to subtract out certain federal income taxes. I won't get into the details of that, but the idea is we're not going to give you free money for money you would have owed back to us. Okay.
We got to come up with that on our own.
Yes. So the eligibility determination is pretty straightforward. Just keep in mind there are some landmines when it comes to forgiveness, and very few businesses, in my opinion, are going to get full forgiveness. That's not a problem so long as you know what the likely delta is between what you're about to borrow and what's going to get forgiven. And I'm telling my clients, in most cases, I'll let them make the decision, but I show them what it's likely to look like on both eligibility and what's likely to be forgiven, and then tell them, if it's me, I would say borrow as much as you can. The worst that happens is up front what's likely not to be forgiven, put it in the bank. When your 8 weeks is up, you'll get forgiveness for the portion that is allowable, and you just take the money out of the bank and pay off the rest of the loan. But if at the end of that 8th week you think, you know what, I really still need that extra money, you just keep it, and you have 2 years to pay it off at 1% interest, which you're not going to get anywhere else if you can find money at all. And maybe it gets you through that extra month you need till this thing turns around. So that's small businesses. A sole proprietor works pretty much the same way. The difference is a sole proprietor would report its net earnings on what's called a Schedule C to your tax return. If you don't file a Schedule C, don't worry about it, because this is going to be meaningless to you. But if you do, then you are allowed to, you go through the same calculation, except in this case, you take your total Schedule C income up to $100,000. And by the way, I want to back up. When companies are counting up the wages that they paid in the last, they have to subtract out anything over $100,000. In other words, the government says, we're going to loan money for you to pay payroll for people making up to $100,000, but not above that. So the same thing is true. So if you had a small business where you're a sole proprietor, and let's just say you made exactly $100,000 last year. If you made 120, you can only count 100. If you made 80, the calculation will work the same, except you'll use 80. You take the $100,000 that you made, it'll be at the bottom of your Schedule C. You divide it by 12, and you're going to get a number. And I know from having run this calculation 100 times in the last 4 days, that number will be $8,333 per month. You're going to multiply that times 2.5, and you're going to get a number slightly north of $20,000. That is the amount that you can borrow. You put that on the form, which is very short, 2 pages, as I said, and asks for very little financial information. It basically just says, how much are you eligible for? Okay. And banks, by the way, are not required to recompute it or do any auditing of your paperwork. The SBA's new guidance this morning made that clear because some banks were holding things up. And you'll now have about 22 grand in your pocket. Now, as a sole proprietor, you're not going to be able to demonstrate payroll over the next 8 weeks. So basically, just for breathing the next 8 weeks, you get to forgive 2 times the 8,333 or 16,667. Okay, so almost 17,000 of your 21,000 plus will be forgiven just by you submitting a statement saying, I paid myself, I used the money.
Wow, that's
Yes.
fantastic.
Well, yes, because and the reason again is the government is really just, this is a classic case of throwing money at the problem, and I happen to think this is a good time to throw money at the problem.
Yeah.
All right, so their real concern is about getting the money out there in the hands of people who need it, not creating a lot of bureaucratic excess. Now, you'll still have 4,000 or so that isn't eligible for forgiveness unless you have rent, utilities, or mortgage interest. And keep in mind, if you're a sole proprietor, that doesn't mean you can include the entire rent on your apartment, the entire mortgage interest on your home for those 2 months, or your utilities for those 2 months. You would have to have a home office of some sort, and then you would prorate the amount of your utilities, mortgages, or rent based on the square footage of your home facility, whether it's an office or a garage or whatever it is you use, by the square footage of your house in total. All right. And then again, the banks are supposed to request paperwork for this. The one thing I will say here is the SBA has another 8 weeks to develop more formal guidance for the forgiveness point, and I'm sure and I'm sure they will, because just they've come out with guidance on the eligibility thing twice in 3 days now because of questions. So that'll be a little bit clearer, but basically that's how it'll work. So you're going to get most of that 22 grand forgiven. And again, you have to ask yourself the question, to the extent that I'm worried about the rest not being forgiven, well, I can just set it aside now, and then at the end of my 8 weeks, use it to pay off the balance of the loan. Or if I'm still struggling, hold on to it, and then I've got a 1-year loan at 1% interest that'll help me get by. So
that's fantastic.
That's your sole proprietor.
So it's almost like you can't lose to at least try for it.
We are telling our clients that this is a no-brainer.
Yes, it certainly is. And we do have a question on here, Don. So someone, it looks like Steve is asking, does this apply to S Corps? So where do S Corps fall, and can they start applying today, or is that on Friday?
S Corps are small businesses. They could have applied as early as last Friday. The S Corp would look, and actually, we are taking the position at our firm. I'm not sure everybody is going to do this, okay? In some cases, the owner of an S Corp takes a very small salary. In other cases, they may take more. The bottom line, if you're not familiar with an S Corp, then just tune out from what I'm talking about so as not to get confused.
We are an S Corp, so I want to hear this.
If you have an S Corp, you know what I'm talking about.
Yes.
So you pay employees, but you also have a net profit from that S Corp. We are telling our clients to argue, but we're informing them that there's a little bit of uncertainty here. But the way we think the law reads, your payroll is, you calculate your payroll for the S Corp based just as you would for, it's a small business. An S Corp is nothing but a tax election. It's not a legally different type of corporation than any other corporation. So you calculate your average payroll. But we then believe you can also take the self-employment income at the bottom, potentially, and count that as eligibility. All right. Okay. Now, we had a lot of debate in our firm about this, whether you could combine the two. It's our conclusion from reading the law, and I don't think that a lawyer is going to be much better at this because it's a really clumsily written law. But that's how we're doing it for now. But for most people, at an absolute minimum, an S Corp is just a small business, and you can simply do the payroll calculation the way I described earlier.
Okay. So yeah. So if you're an S Corp, you can apply today. And Don, I'm hearing that there is limited funding. So we should, if we think we want this, we should do it right away, or can we wait a couple weeks and think that there may still be funding there?
Well, as I told somebody last week before the period even opened, I said, when they asked me that question, well, I hear it's going to be $349 billion reserved, and for the potential for, forgiveness. And I said, well, I'm guaranteeing you right now that's not going to be enough in Congress. And of course, the headline of the news last night was, on the Washington Post at least, that Congress and Trump are meeting because they realize it's now not enough. Yes, but for right now, yes, $349 billion is the amount that is out there. Once banks, which have to report to the SBA every day how much they've gets loaned, once that number gets to $349 billion, they have to stop. So, and the guidance released by the SBA on Thursday says it's first come, first served.
First come, first served.
Yeah. So I would not wait.
Okay.
Would not wait.
So another question out here, and I hope I'm understanding this right. Sonia is asking, can I pay my taxes? So I'm wondering, I'm assuming this question means, can I use this money if it's income to me to pay my taxes with it?
Well, the law, if we're talking about a self-employed person, my answer to that would be yes, because you would have used your wages, or excuse me, you would have used your self-employment income, or if you're a 1099 employee or a sole proprietor, you're going to have used your cash flow during that period, to pay your employees and so on. So yes, they're not coming back to audit what you used it for. But just remember, if you use it for that and you aren't using it to pay employees, so I'm not sure if we're talking about it. If we're talking, let me clarify. If Sonia is asking about a Schedule C or a 1099 person, if I'm a 1099 or a Schedule C person, then the answer to that question would be yes, I can use it to pay my taxes, because I would have used my income from being a Schedule C or a 1099 during this 8-week period to do that anyway, right? I would have taken my earnings and said, no taxes, I got to use it to pay. So the answer is yes. The answer is totally different for a business, because a business doesn't really, a business has got to prove that it made the expenditures for payroll when it goes to ask for forgiveness. The 1099 person, the self-employed person, the Schedule C person does not have to prove payroll expenditure for forgiveness. There's no way for them to do it, because in effect they're paying themselves. That's what being a 1099 person means. That's what a self-employed is. The income I get from my Schedule C is my income. Okay, it's assumed I paid it to myself, and therefore the same rule apply in the covered period.
Okay, but if you're a small business, then really the majority of that money needs to be used to pay your employees, and if not, then you're going to have to pay it back.
That's correct. And I don't want to get too technical in this conversation. There are a couple of landmines for small businesses. I talked about one of them, which is that when it comes to forgiveness, you're going to have to pull out the federal income taxes that were withheld in the FICA and the employer FICA, but also there's a couple of tests. So you have to calculate the FTEs, full-time equivalent employees, you had during the 8 weeks and compare them to the same 8-week period as last year. And then if the percentage is lower, if it's less than 100%, that reduces your forgiveness. So if you had, I'll use a simple number, during the 8 weeks this year that you have the money, the loan, you have 90 employees, and last year during the same period you had 100 employees, then your forgiveness percentage is only 90%.
Okay. Now, is it employees during those 8 weeks, or I thought I read somewhere that if you rehire by June, beginning of June or June 30th, that you can count at that date. Is that not true?
What happens is you can count employees that are rehired within 30 days of the act, I believe.
Within 30 days of the act.
Okay. Yeah, that's what the law says. Now remember, one of the things that's important here is the SBA is named in the law as the administrator. And for those of you who are unfamiliar, when Congress passes legislation, it generally is not nearly as detailed as most people think. and it almost always then it extends to the particular federal agencies that requiring for administering the law broad authority to interpret it and create rules and regulations. So when a tax bill is passed, the IRS gets that authority. When the ACA was passed, we saw that Health and Human Services had broad authority to write all kinds of rules around it that were not specifically in the law. The same thing is true here. So for example, you borrow that 2.5 times of payroll, but no more than 25% of that amount can be forgiven by non-payroll amounts, which I don't think will be a problem for most companies. They're not even going to be able to get that much. But that's not in the law. The SBA made that up, okay? Because they're allowed to. They're the administrators. So they're allowed to come out and say, these are the rules.
Wow.
There are only a few actual rules in the Act. So so the forgiveness amounts, you do want to be wary. I don't think anyone will get 100%. The only way you'll get 100% forgiveness is if you're ramping up your payroll in the 8 weeks.
Okay.
What it was left. Now, but to go back, yeah, my recollection is that you have 30 days. If you laid off employees before February 5th, before a certain date, February 15th, I think, you're allowed to rehire them as long as you rehire them within 30 days of the Act's passage, which was, I think, the 3rd or something like that, and then they can count. Okay. I'm happy to answer. I'll look into that and get some people more specifics about that. But yeah, obviously a bunch of people laid off people in the last few weeks, and the idea is to get them back on the payroll.
To get them back. So yeah, that's the idea. And I like your thought about, I suppose if you want the full loan forgiven, that might be a motivator for some businesses. I mean, once we get back, there may be a few businesses that actually this has been an opportunity for them. You know, I mean, like Instacart and you know, Amazon and a few others. I know of some people out there that they are working overtime and they're hiring. So it's not going to be everyone, but I guess that would be an encouragement for them to then go ahead and engage and hire even more employees to get the economy moving. Is that the idea?
Yeah. In fact, to me, the classic example of who this law is directed to is a restaurant, because restaurants have had to shut down, right? So they've laid off a lot of their employees, except for the ones that can do pickup and delivery, and some are obviously more successful with that. So this law allows them to take their average payroll for the past year, go in and get a loan for that amount, rehire those employees even to do nothing, okay?
Yeah.
And as long as they rehire them and pay them over that 8-week period, that part of the loan gets forgiven. The business, the restaurant, though, also gets to count toward forgiveness its rent, which it has, and its utility, which it has in spades. So benefits the restaurant by helping them cover their rent and utilities for 2 months, benefits the employees by giving them money, whether the restaurant needs them or not. They just have to hire them back, you know, can have them sit at home. So, yeah.
So we've got a couple of questions here. Sandra is asking, where do I go to apply for this? Yeah, where do I go to, where can we apply?
Okay, you apply by filling out a 2-page form that can be downloaded from the SBA website, but I've created it has to be typed. So I've created an editable PDF version, which I have sent to Jeanette. So perhaps she's willing to share it with anybody that wants to email her. But otherwise, you can get the form at the SBA site or the Treasury site. And you fill it out and get your paperwork together and then go to your bank or a bank of your choosing. That's where you apply.
Okay. And I think someone may have missed at the beginning, you talked about this, but they were asking, as an S Corp, what are the minimum requirements to apply? So can you just real quickly say, you know, who can apply for these loans, what size businesses?
Yeah. So let's just drop the term S Corp because it has no relevance to this. An S Corp is a corporation. You could be a small business organized as a corporation, a partnership, a limited liability company. Doesn't matter. If you meet the small business test, you're a small business. So if you're a small business that has, if you're a small business, meaning you are one of 2 things, you have fewer than 500 employees, and that applies to 501c3s as well, because normally the SBA maintains size standards, and they're either people-based or revenue-based. The people-based standards actually go up to 1,500 employees. So technically, you can be more than 500 employees, but if you qualify as small under the SBA's existing size standards, which go up to 1,500, then you're small. Similarly, if you are already under an SBA revenue size standard but have outgrown it, but are still less than 500, you can apply. So the law reads, any business fewer than 500 people or which already meets the SBA size standards for their NAICS code, North American Industrial Classification System code. All right. By the way, restaurants get a special provision. The affiliation rules are waived if your NAICS code begins with 72, which is restaurants. So restaurants are allowed to do their count by location.
Wow.
So a chain of restaurants is allowed to look at each location separately in determining the 500, which is a good thing.
So that's a lot of businesses out there. Less than 500 people, you should check it out.
Tons.
You'll probably qualify for that.
Probably going to qualify.
One other question here, you might want to give a little bit more clarification. So the question is, so if a sole proprietor applies for the loan and claim they've used it at the end of 8 weeks, that they've used it all, then you're saying the loan is forgiven and you don't have to pay it back. A sole proprietor.
Little slight twist on that. You're borrowing 2.5 times your earnings for the last year. You can only get forgiven for 2 months worth. All right. So if I divide my sole proprietor earnings by 12 and I come up with, since 100,000 is the max, I'm going to go back to that example again. So if I had $100,000 of earnings as a sole proprietor last year, divide that by 12, I get 83.33. I'm allowed to borrow 2.5 times that. So that's $16,667 plus $4,300. That's about $22,000. The only automatic forgiveness is going to be for 2 times the 833 because that's the wages I'm considered to have paid myself over the 2 months. The other portion can be forgiven by a share of by rent, utilities, or mortgage interest payments. But again, since if you, for example, if you have an office in your house, you can deduct and you can take and qualify for. Let's say you have an office in your house that takes up 1/10 of your house, then you would be able to take 1/10 of your mortgage interest, not the total payment, but the interest. 1/10 of your utilities, electric, gas, telephone, internet, and apply that toward forgiveness. Okay.
Okay.
Okay. So there is no way anybody gets 100% forgiveness of their loan, whether you're a business, small business, a proprietorship. There's no way you get 100% forgiveness based just on wages or presumed wages, unless you ramp up and actually hire more people than you had around last year. And that's really only a business. For a sole proprietor, you can't hire more than yourself.
Yeah.
Well, I suppose you could. You could hire an employee.
Maybe this is the way to move forward. Make that higher.
Find a friend who needs money.
And then, as you were saying, though, worst case is some of the loan has to be paid back at 1% interest over 2 years.
2 years.
2 years. So that's pretty awesome.
Yeah.
I mean, you're not going to get.
If you were a sole proprietor and you had $4,000 that wasn't forgiven, you're going to pay $40 of interest per year for each of the next 2 years
to pay that back. So that does give us some time to recoup and get back. And I guess many people would be saying, but there really is no free lunch because the entire American people, will be figuring out how to pay all this back eventually, right? That's the way.
It's effectively what, now I won't get into that. I mean, the government is printing money, no question about it. But the effect of that printing money will be shared by the entire population. Okay, ultimately, because when you print money in enough quantities, it contributes to some inflation because it devalues the value of a dollar. Okay, if there's $4 billion in circulation today, and there's a limited amount of goods that we can purchase, then tomorrow there's 8 billion, the price of everything would eventually double. Okay, so all of us just start purchasing. But that's really not, I want to get into that here. Now, this is really, ultimately, this will be broadly shared. The cost will be broadly shared by everybody, which I think is a good thing considering the times we're in.
Yeah. Agree. This is another place we're in this together.
Yeah, it's not a ripoff. It's not a con game. The banks are not making big money off of this. I've seen people saying, "Oh, this is just done for the banks." No, The government did not have the ability to get this money out there directly itself. It doesn't have the infrastructure. That's why they brought the banks in.
Yeah, yeah. And I will just say, I know we've had folks that have said, well, why take care of the businesses? Why not just send it directly to us? Although I understand there is some money coming directly to us. But one of the things that I really appreciate about this as a business owner is we love our employees. Like, the last thing we want is to let all of our employees go. And this has been structured in such a way that they're saying, we're going to give you this money, but if you want it for free, you need to give it to your employees, whether they're coming in to work or not, right? Because maybe you can't be open, but they need a paycheck. So it really, I feel like it really is organized in a way that it is a paycheck protection for Americans, funneled through small businesses so that they can keep functioning.
Right, and not just small business. Remember, sole proprietors and 1099 recipients count too. And there are other programs to help people who are employees who have had their wages cut or unemployed, including a really generous. I mean, the federal contribution to the to an increase in the unemployment amount is huge compared to what. In fact, that was one of the reasons they argued about this bill was because I believe it was $600 a week. So now unemployment goes up by $600 a week because the federal government's kicking in $600 a week, and certain people in Congress are arguing, shoot, when you take the unemployment amount as it was and you add another $600 to it, how's Walmart going to get anybody to go work for them? Because that's more than they're, to pick on somebody. I didn't mean Walmart is a good employer. So there are generous benefits out there for employers, for unemployed people as well. But yeah, you have more of a mess probably applied for them and everything because of the long lines and stuff. But yeah there are other things. Plus, there's this $1,200 stimulus checks that are coming out for people earning. I think it's under $75,000 if you're single. I think it might be 100 and some if you're. I'm not as learned about that as I am this program because most of my clients obviously are
okay. This has been really informative. So one more question. I don't know, Don, do you know anything about the grants? Because I noticed that there's up to a $10,000 grant on the SBA.
Yeah, that's a different thing though. Okay, so what that is it's not really a grant per se. It's called an economic injury disaster loan. All right, that is a different program. You can apply for both, but they're very different. You apply for the economic injury disaster loan. Which I'm going to call the EIDL, is limited, I believe, to $2 million instead of $10 million. It has a 3.75% interest rate. You apply directly with the SBA at their site online, and you can do that. And they're supposed to give you the first $10,000 is a grant, and it's free, and you get it within 3 days. The rest of the loan takes longer, and it is based on I think you have to submit a credit application, and for an amount above, I think it's amount above $200,000, then there's credit approval required. By the way, for the PPP loans, the banks are not allowed to request collateral. They're not allowed to request personal guarantees, and they don't run credit checks. It's just put your application and submit your documentation, and the money's supposed to get out the door right away. And they're riskless to the banks for that very reason, so that the bank is not on the hook. There's more what's called hold harmless language in the bill saying we hold banks harmless, we hold banks harmless. So the EIDL, yes, that's a quick way to get a $10,000 grant, but it's not a quick way to get any money beyond that. Now you can apply for both, and you can roll if you're going to do an EIDL loan, my suggestion would be do that first, and then roll it into the PPP loan. You're allowed to do that. You can roll an EID loan into a PPP loan. The $10,000 grant will not count toward forgiveness, so you're not going to get a double benefit from that. Now, the danger in doing an EIDL loan first is if that takes a week and a half to get approved, then it's a week and a half before you can go get your PPL loan. You can do them separately and get them both at the same, and then have them separate. But remember, the one carries a higher interest rate. It can require collateral. You're allowed to require collateral for it. And also, You have to have, I believe you have to, in order to apply for that, you have to be part of a disaster zone. You have to live in a disaster zone. It's either that or you have to certify that you've been directly impacted by COVID-19. The PPP loan, you just have to provide this kind of mild, bland certification that my business has been affected. It's nothing, okay?
Yeah.
Whereas the EIDL requires a certification that you've been directly impacted. I think it may even require that the certification that you've been directly impacted is contingent on being in a disaster area. So like New York's been declared a disaster zone. I think Seattle has. I'm not quite as up on it because not many of my clients are asking for that one. It's by far not the better of the two. You know, higher interest rate, collateral, potential credit check, all that kind of stuff. So it's not really a grant. There are some grants and things like that, but they're really different programs.
Okay.
And they generally require, most of the grant money that's out there says you can't do the PPP and the grant.
Mm-hmm.
Okay.
Wow. Well, this has been really helpful, Don. Thank you so much.
Okay,
Todd is asking, will this webinar be available to see again later? And the answer to that is yes. You can check out, it should show up on Facebook again, and we will also upload it to the Seneca Creek YouTube page. Thank you all for joining us, and we know that there are a ton of folks out there that are suffering right now, and they're worried. And so please share this with friends. And like I said, one thing I learned today that people may not know, like if you're a real estate agent getting a 1099, you know, you qualify for this. So you don't have to be a business with lots of employees or even a handful of employees.
Right.
There is help out there, and it's pretty, I mean, there's documentation, but it's pretty simple.
Pretty simple.
To check
pretty
even,
painless.
and a lot of it may be, if you play your cards right and play by the rules, which are good rules, be forgiven.
Yep.
So let's get this information out to folks. Don, thank you so much.
Real deal. Yeah.
Yeah, thank you so much.
Okay, you're welcome. I'm glad to help.
And us and our church and the folks that are on here. And yeah, and so folks, if you have additional questions, you can certainly send those questions to message them on the Seneca Creek Facebook page, or send them to info@senecacreek.org. And if we can't answer them, we'll put you in touch with Don, who is the expert and can help you. So you guys have a great day. Stay safe, stay home, but go make those loan applications.
Okay. Have a great day, everybody. I'll talk to you later.
Thank you. Bye-bye.
Mm-hmm.